Well, good afternoon, everyone. Mindy, thanks for the introduction. In the interest of full disclosure, I have to tell you that Mindy is on my Sustainability Advisory Council, and that if I didn't do some of those things she mentioned, she would hold my feet to the fire. But I'm really pleased to be invited here today to talk at this first CECP CEO Strategic Investor Forum. I think it's a great addition to the work that CECP does. I have to tell you, though, I'm a little apprehensive about talking up here. I've been a CEO since 1998. We did our quarterly earnings review, and somebody calculated it was my 76th one that I did 2 weeks ago. The reason they calculated was that in 2 days, I will be stepping down as CEO of PG&E. Geisha Williams is going to succeed me. And I'm thrilled about that. Geisha is, of course, one of the few women CEOs in the Fortune 500, but the first Latina CEO in the Fortune 500. So I've given lots of traditional investor speeches. I mean, I can do those in my sleep. But we want to take a little bit different approach here today. And I got even more nervous when Doug this morning was talking about this thing. He said, you know, we're trying this out. We'll get better next time. Come back in September. So I feel like I'm the guinea pig up here to see how it works. But you know, since this is one of my last public presentations as CEO, even though I'm staying on as executive chair of PG&E, it's kind of caused me to reflect on my 30-plus years in the utility business. First as president and chief operating officer of Long Island Lighting Company, right out here across the East River. And then I was 17 years in Detroit at DT Energy, most of them as the CEO, and then the last 5.5 years as CEO of PG&E. And there's kind of a stereotype out there that utility businesses are kind of predictable and boring. Many of you investors may like that. And I think that's, in uncertain times, that's why people kind of flock to the utility industry. I wonder why we just hit an all-time high in our stock price. Maybe it's people flocking to us. But, you know, the story is very different these days. And utility business today is anything but boring, and that's particularly true in California. I've never seen a more exciting time. The speed of change that we're seeing is probably the fastest in a century. But it's creating enormous opportunities for companies that can figure out how to navigate that change. And I think PG&E is in a great position to do just that. There are a few other companies that are better situated. So today what I want to do is weave together two of the themes that I think are the themes of this conference. One is that PG&E is a company on the cutting edge of community involvement and sustainability practices. And then on the other hand, it also is a very attractive investment for the future. So I'm going to put up the obligatory slide that says these are forward-looking statements, and we won't spend any time on that. I do want to start out by just grounding you in who we are as a company. PG&E was incorporated in 1905. It's one of the largest combined natural gas and electric companies in the U.S. We're based in San Francisco. We have 23,000 employees. We serve 16 million Americans. We serve 1 in 20 Americans. Our service territory is massive. It covers 70,000 square miles from basically the Oregon border to Bakersfield, from the Pacific in the west to the crest of the Sierra Nevadas in the east. $1.9 billion in income from operations, excluding some special items. A $32 billion rate base. And we have some of the cleanest energy in the U.S. I'm pleased to report, and the official numbers aren't in yet, but in 2016, nearly 70% of the electricity we provided to our customers was totally carbon-free. So at PG&E, safety is the foundation of everything that we do, and there's a good reason for that. In 2010, the company experienced a devastating explosion on a natural gas pipeline in San Bruno, California. And so when I arrived there in 2011, the community and the company were reeling from the impacts of that tragedy. And our employees and our leadership looked deep within themselves and concluded that running our operations safely and reliably was the absolute prerequisite to any success we might have going forward. We concluded that we couldn't lead the way into the future financially if we weren't leading on safety. That is the bedrock that customer trust is built upon, and we had to rebuild that trust. Also, reliable service is essential. Our customers need to know that they can count on the lights being on and gas being there to heat their homes. In fact, in the digital economy, reliability is everything. It's more important than ever, and then it becomes more complex as we start to integrate more and more renewables and other really cool technologies onto our system. So when I joined the company, we took a back-to-basics strategy to really focus on safety at the forefront, and then reliability, and then affordability and clean energy as the other things we were looking at. At a leadership level, we added new board members and executives with significant utility experience. In 2012, we were the first utility in the industry to start to publish a dashboard that tracks how we're performing on key public safety metrics, such as emergency response time to gas leaks, reduction of gas dig-ins, where people dig into our gas pipes, the number of wires that come down. And we publicly set our goals for that and then track those goals, and it has driven significant operational improvements. We also restructured our annual incentive plan for all of our non-union employees and some of our union employees. Obviously, you have to negotiate that with the union. But now 50% of our incentive plan is now tied to our performance on public and employee safety metrics. And finally, we had to focus on culture. Safety culture is probably the most critical piece because that's what ultimately drives the performance of our employees. And we wanted to install a continuous improvement mindset by encouraging employees to identify the gaps. My theme song when I got there was "Celebrate the Gaps," because if we don't know what's wrong, we can't fix the problems. And I wanted to be sure every employee felt comfortable with doing that. And you know, first the employee's reaction was, yeah, right. The first one that steps up and identifies a gap, off with the head. We actually instituted an award called the Giraffe Award for sticking your neck out. And we would give awards to employees who would identify problems and celebrate those gaps so that employees got comfortable with actually identifying things that we needed to improve. And all of these efforts have paid off incredibly. We've achieved industry-leading performance in a number of our gas safety metrics. We were the first utility in the country to be certified under multiple industry quality standards for our asset management programs. And we're the first company in the U.S. to meet the American Petroleum Institute's standard for pipeline safety and safety culture. On the electric side of the business, we actually had a stretch of 7 straight years where each year we broke our own record for the lowest number of customer outage minutes. That trend was broken in 2016 because we had a series of major storms towards the end of the year. But even with those, it was the second best year we've had in the company's history in terms of reliability. And part of that is because we have invested in a modern self-healing grid that now automatically isolates and minimizes customer outages. It's the coolest thing I've seen in my career. And our response times on both gas and electric emergencies are some of the best in the industry. And these improvements are paying off. They're really showing up in our customer satisfaction scores. While we still have work to do, our J.D. Power results across all customer classes have increased steadily since 2012. And in fact, our most recent J.D. Power scores for our electric business customer segment has now moved into the first quartile. Another contributor to these satisfaction numbers has been a highly successful advertising campaign where we highlighted employees across the company, and what we highlighted was not only their professional commitments to their community, but their personal commitments in terms of their volunteer activities, and our customers seem to love that. So while safety is our foundation, I want to turn now to some of the strengths that I think make PG&E an excellent investment and give us a strategic long-term advantage. And of course, today we're talking about a long-term focus rather than a short-term focus. And the first of these key strengths is our focus on sustainability, making us one of the greenest utilities in the U.S. At PG&E, we've been committed to sustainability for decades. This is not a flavor of the month. With our historic hydroelectric generation units that actually date back to the early part of the 20th century, and our Diablo Canyon nuclear plant, we're pretty much in the top echelon of the cleanest utilities in the nation. But over the last 10 years or so, the addition of renewable technologies like wind and solar, our numbers are getting even better. And as I said before, last year, we almost hit 70% of our electric deliveries being carbon-free. That's twice the national average, and it's only going to get better because we continue to grow those programs. We've also had a long history of leadership in energy efficiency programs. California's programs have saved more than $50 billion in the state since they were initiated in the 1970s. And as a state, during those years, electricity use per capita is almost flat, whereas in the rest of the country, electricity usage per capita has gone up around 40% or so, depending upon where you are. In 2015, which is the last year we have all the numbers in for, PG&E's programs saved our customers about $225 million. And if you look back over the history of the program, our energy efficiency programs have avoided the emissions of 375 million metric tons of carbon dioxide. And that is really important to our customers. They pride themselves on their environmental stewardship. PG&E's customers are leading the way in cleaning up the environment. We have 25% of all rooftop solar units in the United States are hooked up to our system. It's almost 300,000 units. 20% of all electric vehicles charge from our system. That's about 100,000 units. That's more than anywhere else in the country. That transportation piece is critically important because 40% of California's greenhouse gas emissions come from the transportation sector. And if a state is really serious about significant reductions, they're going to have to deal with the transportation sector. And we are going to be a partner with the state in dealing with that. Last December, our regulator authorized investment over the next couple of years to install 7,500 electric vehicle charging stations. We've just recently, in this past month, filed another request to invest an additional $250 million for infrastructure to support electrification of medium and heavy-duty vehicles like transit buses and the like. And with the state targeting 1.5 million EVs by 2025, we see the potential for expanding these programs in the future to be a driver of growth for us. So when I talk to my peers at other utilities, they're kind of astonished with the sustainability results that we've shown. And yes, it's due to the fact that we have this culture of sustainability at PG&E, and it's also due to the fact that our customers want us to be in that space and continuing to increase our numbers. But another key driver is the progressive and constructive regulatory structures that exist in California. In California, electric revenues have been decoupled from sales for decades. So in other states, utilities have an incentive to encourage more energy usage because that means more revenues. But there are adjustment mechanisms in California where our revenues aren't really impacted by changes in the energy load. So we actually are incentivized to help customers use less electricity. And this framework has allowed us to have the great success that I was mentioning over the last 4 decades in energy efficiency. The state also authorized a number of things called balancing accounts. So these are accounts that track and allow full recovery of costs that are unpredictable and totally out of our control. So think of things like storm costs, earthquake costs. We had a large earthquake in Napa 2 years ago. We don't have to worry about how much we're spending to fix those problems because we know it'll all be trued up in the future. So those programs are very helpful. We have a very progressive rate case process. You know, most rate cases, the arguments center on how big the bill is going to get. California now requires a risk analysis, and we love that because that's where we start our analysis. What are the risks to our assets and how much do we need to invest to reduce those risks? We're now required to give that to the regulator, and it has helped tremendously in kind of closing the bid-ask spread on rate cases. Another part of rate case, cost of capital proceedings. They're usually used by regulators to kind of true up the numbers and put their finger on the scale. Well, in California, there is a separate cost of capital proceeding that all of the utilities end up getting the same cost of capital. Our current return on equity in California is fixed through 2017. It's 10.4% right now. That's well above the national average. And we recently, all the utilities announced a settlement with all of the other parties that will keep California's utility returns very attractive through 2019. Another key strength that we have is the ambitious climate goals that are being set by our state's leadership. State law is now targeting to reduce greenhouse gas emissions by 40% below 1990 levels in 2030, and to get there, California has to increase our renewables content to 50%. We have to double our energy efficiency programs. I said we already have huge energy efficiency programs, and we have to work on electrifying the transportation sector. And I will tell you, I get asked all the time, well, what's the election going to do to this? Despite the recent changes in Washington, Governor Jerry Brown and the legislature have made it clear that climate change is going to be a key driver of state policy as long as any of them are around there. So at PG&E, we remain steadfast in our commitment to support California's clean energy goals, and inspired more than ever by the urgency of that work, and we're optimistic about our ability to really make a difference there. Because the prospect of a warming planet and more extreme weather events like we've seen over the last 8 weeks means that we have to be increasingly focused on not only slowing climate change, but also focusing on making sure that our system is climate resilient, because it's going to happen. And that drives significant investment that's going to drive our growth. So these California policies will drive infrastructure investment. And as I said, the policy goals aren't going to change. To support our safety and reliability values, we're investing in multi-year programs to enhance our gas and electric and generation assets. And to enable California's clean energy economy, we're going to continue to modernize the grid to ensure that our systems can effectively integrate both the increased renewables and new distributed energy resources that are going to be coming along. And longer term, California is working on some of the largest rail and water infrastructure projects in the country. And we expect that will require hundreds of millions of dollars in PG&E investment over the next 15 years as those projects go forward. And we've got a proven track record of being able to finance and deliver on those types of large-scale projects. I just want to give you on this next slide just a couple of specifics on what are those opportunities. So on the gas side of the business, we've been steadily increasing the percentage of our gas pipeline system that's capable of inline inspection. There are all these cool devices. They're called smart pigs. You think of this thing running through, but these are very sophisticated devices. The challenge we have is because our pipeline system was built over the last 100 years, is they weren't designed with these devices in mind. So we have to make the turns in some of our pipes a little bit less sharp so that these devices can go through. And our target is to reach about 65% of our system to be inspectable remotely with these devices, but that requires investment. We also continue to increase the number of miles of gas distribution pipeline that we're replacing each year. On the electric side of the business, by 2019, we're targeting to install automated switches on almost half of our urban distribution lines. As I said, we have this self-healing grid. And with smart meters telling us where our outages are, our computers then automatically switching to take an outage that might be 1,000 customers down to 100 customers in 5 or 10 minutes, where it might take 2, 3, 4 hours in the past, even to discover the size of the outage. So another area of growth for us is the continuing development of this grid of the future. And as you can see on this slide, we expect to spend about $1 billion through 2020 on grid modernization projects. Our customers are early adopters of these new technologies. I said we've got the most solar rooftop installations and electric vehicles in the country. Battery storage is going to be coming along, and the demands on our distribution grid are greater than ever before, and we need to continue to invest in technologies and systems so we can take advantage of these technologies. Think of it as the Internet. So back when the Internet was invented, a couple of professors could send their papers back and forth on dial-up modems, and that was about all it could do. Today, you can do anything you can imagine, and some things you probably can't imagine on the Internet. Well, the grid is the same way. Designed as a very simple machine. You put energy in one end, you take it out the other. Any good engineer could calculate the flows. Today, we have 300,000 power plants, the rooftop solar units, feeding electricity in at all different times of the day, not at night, but at night then you've got the wind that kicks in. And it is an incredibly sophisticated problem to be able to do that, and it will require ingenuity and will require investment. On the ingenuity front, we're teaming up with people like Solar City and GE and other partners in a series of demonstration projects to evaluate how energy storage and smart inverters and rooftop solar can improve our ability to manage this system with variable power flows. And I also mentioned before the critical role we are going to play in electrifying the transportation sector well into the next decade. So at the beginning of my talk, I said that this was a time of enormous change in the utility business. The drivers are decarbonization of the energy sector, customer demand for energy choices, and then all of these new technologies that are coming along. And I think PG&E is well positioned through our grid modernization efforts that will enable us to integrate renewables and other distributed generation and take advantage of these new technologies that are going to be coming along, ones that we know about and ones that we don't know about. We're already leading the nation in EV adoption, and we're exploring energy storage options, and we'll continue our industry-leading efforts in energy efficiency. So we are well positioned to take advantage of these new developments in our industry. But all of this investment does come at a cost. It's a cost that our customers have to pay. And because our customers are going to have choices in the future, we need to think of ways to reduce our costs and ensure that our services remain affordable. And our actual total bills still are well below the national average, but we have to make sure it stays that way. And that's why we've also started a drive to get sustainable efficiencies into our own cost structure using extensive benchmarking, continuous improvement programs. We've started to see some real progress on this front. So, just some numbers. I've tried to stay away from it. Usually I start with numbers and finish with numbers, but I've avoided them. But all of the things that I've been talking about, the relentless focus on safety and reliability, and the investments to support the changes in our industry, we believe that we will be able to generate roughly a 6.5% to 7% rate-based growth, which is what drives earnings in the utility business, and that will also allow us to grow our dividend. Last year, we announced the first dividend increase in 6 years at the company. We've committed to increase our dividend payout ratio to 60%. We're now at around 50%, to 60% by 2019, which we expect will yield above average dividend yields over the next couple of years. So at PG&E, we're working together to build a better California. That's just not a tagline. It's actually the way we've done business for years and years. Just as PG&E advances in safety metrics and safety culture were the result of our intentional plans and actions, so too are our achievements in clean energy, environmental stewardship, and diversity. We formed our own Sustainability Advisory Council. As I mentioned, Mindy is on that, but we also have notable individuals such as Heather Zeichel, who is President Obama's Climate and Energy Advisor, David Hayes, former Deputy Secretary and Chief Operating Officer of the Department of Interior for both President Clinton and President Obama. Last year, we were named to the Climate A-List by CDP for our work in creating a low-carbon future. On other fronts, we've received the Gazelle Award from the National Minority Supplier Development Council for spending a record $1.6 billion with minority-owned businesses in 2015, and a record $2.5 billion with diverse suppliers. 2016, we were named one of the best employers for veterans by Military Times, and this is an award that I particularly like as a former naval officer. This is something I've personally championed. In 2009, we were hiring about 50 veterans a year. Last year, we hired more than 270 veterans, and they are great employees for us. And last but not least, one of my biggest priorities at PG&E was to take time to identify and invest in our future leaders. We put together a year-long leadership development program that focuses on giving our director-level leaders a set of skills and a different perspective on their jobs, and focusing on how they can take a broad vision of what they're doing, that they're not only trying to do their jobs, but they're also trying to serve the communities in which we live and work. And through this program, we've encouraged employees to take risks, go outside of their comfort zone, and create a culture of innovation that will not only help us from a technical standpoint, but help us develop strong relationships in our communities. Last thing I'll say is there are very few utility companies that are investing on the scale of PG&E. Between our gas and electric business, our capital investments over the next couple of years will be in the range of $6 billion a year. I think that's a clear sign that there are great opportunities to grow and thrive for us in California. But our investments go beyond the dollars that we're putting into our systems. It's also about the investments we're putting into our people and the investments we're putting into the communities that we serve. And that's why I'm optimistic about where we're headed over the next several years and beyond. I thank you for being here. This is a great opportunity for me, and I'd be happy to open it up to your questions.
Thank you. Let's have a round of applause for Anthony Early. Thank you very much. So we're going to try to get to all of your questions. We have a little extra time. We've reset the clock here. I've had a lot of pre-signals for people asking for questions, so we'll try to get them all in. So we'll start on this side of the room. In the back, go ahead.
So I was just curious if you have received pushback from investors as your energy mix has transitioned so quickly towards renewables, and what the conversations are like with long-term investors, particularly because I see there's a strong moral/values case, there's a strong regulatory case with state RPS and then investment tax credits and production tax credits, but I'm curious to hear about conversations about the business case with low carbon technology disruptions.
We have not received pushback from investors. In fact, T. Rowe Price, they're our largest single owner with over, I think, $1 billion of our stock. And investors understand that investment in those technologies means growth. Now, you have to have the support of your regulator that you can recover those investments through your customer base. But as I said, California is so committed to this that we don't get any pushback. In fact, the fact that they're starting to look at risk and they're starting to increase the environmental requirements, we've got to invest.
Go to the other side of the room now. Yes, in the back, standing up.
Hi, Dave Kirkpatrick with SJ Ventures. We're a venture firm that invests in solar and efficiency and wind, so thanks for your leadership. I guess my question is looking to the east. So with Clean Power Plan rollback, Paris climate, so what can you do as a leader that's done some good things and great things in California to influence the rest of the country's policy?
Yeah, so I've been active in Edison Electric Institute, which is the trade association. I was actually its chair 2009, 2010. Still on the executive committee. The interesting thing is that while the fate of the Clean Power Plan is in limbo, most utilities are implementing, in effect, what is the Clean Power Plan. Now, the only objections, or the strongest objections that utilities had to it was the pace, because it takes a while to put in replacement. But I don't think that will change the direction. And then in California, it's not going to slow us down in our work at all. The only one negative that we've identified in California, we're working on developing a regional power grid in California. The California ISO is limited to California. We had some interest in states like Montana, Idaho, Wyoming that still use a fair amount of coal. Under the Clean Power Plan, they had to come up with strategies, and we had hoped to be able to sell our excess clean power, and we will have some excess power if our demands aren't high enough, and on bright sunny days we'll have a lot of power, that we could share in this regional grid. There's less incentive now for them to move, but long term I think the economics will drive that incentive.
Thank you. How about in the middle of the room? Anyone? Alan, go ahead.
Full disclosure, my daughter's the Deputy Secretary of Transportation in California, who whispers in my ear good things about you and the company. So my question is, has been the case of other organizations, larger organizations, DuPont comes to mind, PG&E's expertise in leadership and long-termism is itself a saleable product or offer. Mm-hmm. Have you perhaps already created advisory services or consulting services within the organization as a profit center aimed at other utilities in the country?
So until very recently, our focus was on operational performance and growing our own renewables business. We've started to look at whether those are opportunities. Clearly, we have expertise. But we're a $16, $17 billion revenue company. You would have to grow a $1 billion consulting business. And I could consult in 50 states, and I wouldn't get there. There may be opportunities, and part of it may be actually the one area that might be something we look at is buying renewable assets and operating those assets, because we know how to do that. I have colleagues in the industry who look at me, and they're struggling with how to manage 10 to 15% renewables on their system. I've got 33% renewables and going up from there. It's taken a lot of investment. It's taken a lot of expertise in how you operate the system. But I don't think it may be that we just buy the assets, and that way you could get enough scale that it would make sense for a $16 or $17 billion company to be in it.
Thank you. More questions for Anthony? Yes, over there, Professor.
So,
just a quick question, Professor, if I could.
Yes, quick question.
Thanks.
Follow up on what you've just talked about. How do you manage the balance as you're moving fast into renewables? Because it puts a very weird strain on the system.
Yes, and so, for example, our forecasting has gotten a lot better. So we use very sophisticated algorithms to predict weather patterns and what happens when a weather pattern changes and how that affects the output of wind turbines, how it affects the outcome of the large solar arrays. We have improved our real-time monitoring of the system. So in the past, systems did not have a lot of real-time monitoring. I mean, some systems used to have 7-day strip chart recorders. So you'd find out what happened today 7 days from now. Well, you need it like 7 milliseconds from now. And we've made those investments. That's how we've gotten to 33%. But at each step, you've got to make sure that you've got the right things in place to manage that system. And you need some big traditional generation. We are blessed with a 4,000 megawatt hydro system. I can't take any credit for it because I inherited every single one of those megawatts, including the coolest energy asset I've ever seen. 1,200 megawatt pump storage plant in Helms, California. It's about 60 miles east of Fresno, up in the mountains. It looks like 2 alpine lakes connected by a tunnel that goes to the granite rock. And the powerhouse, which is 400 megawatt generators, is totally in a power. It looks like a scene from a James Bond movie when you drive into it. You've got these powerhouses and lights, but when there's plenty of power available, we pump water up the hill, and when we need power, we run it down the hill. And so those sorts of assets really help us manage the intermittency of renewables.
Thanks, everyone, for your great questions. And one more round of applause for Anthony
Great,
Early,
thanks.
CEO, Pacific Gas and Electric. Thank you.
Okay.